Namaste and bonjour, my friends. Welcome to the third episode of Walk the Talk. Today we are meeting the team of zkLend. We'll talk about their project and the space, and I've got some interesting questions for them. We're currently in the middle of Paris, near ETHCC, in front of the hotel. We'll go in and talk with them. Today's not going to be the average walk the talk. More or less, it's going to be sit and talk, because as you can see, the weather is not so nice. It was raining every now and then, but we have to adapt, and let's go. So hi guys, good morning. As mentioned, this is our third episode with the team of zkLend. I'm here with Jane and Brian. Good morning, how are you?
Hey Gurka.
Good morning, very good. How are you?
I'm great, a little bit sleepy. Today is not a walk the talk, it's more or less the sit and talk.
Yeah.
But that's how it is, we can't change the weather. So I think let's just start then. So introduce yourself, who are you guys, what are you doing, and how did you get into crypto?
Sure.
Yeah, I guess I'll go ahead and get started. Do you want me to grab this? Okay. So hey guys, and hey Gurka. I'm Jane. I'm one of the co-founders and co-project leads of zkLend. So I actually got into, well, I'll talk a little bit more about my background. I started out my career in banking, kind of did the 2-year stint most people did, and just, it wasn't my cup of tea. Don't get me wrong, it's a great job, great company, but like I just didn't really feel like I belonged. So after 2 years, I was like, okay, I'm gonna go do something else. And I ended up joining a Web2 startup. So I worked at a company called Deliveroo. And I started out in operations. So I went from, working with some really wealthy clients to working with like riders, like drivers who would go on strike once in a while and things like that. But I loved it. I just loved that I was on the ground. I loved that, I saw the impact of my work. And I decided that, I want to work in a startup-y environment. I want to be able to drive and see the impact of my work. So I ended up spending most of my career at Deliveroo, eventually taking on the role of chief of staff in Hong Kong. But after a while, I was like, okay, well, I need to move on to my next challenge, and have always been interested in, I guess, crypto, but specifically Web3. I got more interested last year when I actually started using some of the protocols. And while it's really great, I realized there were parts of it that wasn't as amazing as I thought it would be, just because of the user experience and all of that wasn't there. We're still in very early stages. And I really saw an opportunity there for me to make a difference. And that's how I got into the space. And I was very fortunate to meet Brian as well as ZK, our other co-founder. And so we just jumped right in and decided, let's start something together.
That's awesome.
Yeah. Brian?
Sure. Thank you, Jane. For myself, before starting zkLend, I worked in the TradFi industry, financial industry for past 15 years. I started off in investment banking, covering Greater China real estate, doing transactions in public and private market fundraising transactions. So in terms of, for example, IPO, bond issuance, and also a lot of private credit deals, basically financings. And did that for about 6 years before moving on to the buy side with another private equity firm doing leverage buyout and things like that. So from my experience, I have been on both sides of the lending table as a borrower with the private equity and lender as a bank, and firsthand understand some of the pain points, some of the restrictions that we have in terms of some of the bank and unbanked clients, how they get access to it, the transparency of it, and also the speed of the executions. So with all that, and I was basically crypto pilled around early part of, I would say, the year before last, and starting to look into it more as a retail capacity, just doing a little bit of speculation investments. And it was until early last year that really got interested into looking at it more seriously as a professional capacity, where I do see a lot of institutions starting to have a lot more tractions into the Web3 space, into the DeFi space. And for me, it's kind of like a aha moment for me, because it seems basically all the things that I have packed together, it's going to go somewhere, and then it's leading to this next challenge and next move forward going forward. And that's kind of when the timeline kind of merged together when I meet with Jane and our other co-founder ZK, and the idea of building a money market protocol on the layer 2 seems like it's just something that we have the experience, we have the capacity in terms of operations and technical capabilities to take this on. So just fast forward half a year, and then here we are, kind of building and looking at the testnet at the moment. So that's kind of the long and short of our background and also how we got started.
Well, Hong Kong is a very big city. You guys are based in Hong Kong. How did you actually meet up? Because you worked at Deliveroo and you worked in TradFi.
Right.
How did it emerge? How did you get together?
I can give my side of the story first, and then Jane can fill it in on from the other vantage point as well. So I have a friend that is basically a founder, and then he used to work in the bank with me. So I have been keeping in touch with him, and basically he was telling me bits and pieces of what he's doing, and I was really fascinated by it. So that was kind of the moment when I really thought, okay, maybe I can make a career out of it, and really doing it full time. And so one thing led to another. I told him that I want to get involved. Is there any capacity I can get involved in your projects? And he told me that actually right now I'm looking at pulling a few people together and have you guys start your own project. And lo and behold, he was talking to CK, and he was having connections with Jane at the same time. And then kind of basically for him, it's just letting us get together and us basically just kind of evolve talking, and then kind of have the idea mature during the process. So I won't take up too much.
It's like passing the baton, he started his own project. He's like, I want to see other people start their project. I guess kind of to add on to Brian's story, I guess in my mind, starting a project isn't as easy as three of us, we want to start a project. There's actually a lot of stuff that goes behind the scenes, right? Like hiring, actually setting up like a company and all of that. And I would say without our advisor kind of helping us through that process, it would have been very difficult, even if we had a great idea, to start zkLend. So, and I think what he did was he also played the very important role of pulling the strings together, right? Like putting ZK, Brian, and myself together, where I would say each of us has some very uniquely different skills. Like Brian comes from TradFi, knows a lot about like finance, business. ZK is like extremely well versed in Cairo, and he's obviously one of the first devs in the ecosystem, and dare I say probably one of the best ones. And then I guess on my end, I've always done operations, so I'm very intrigued, and I'm very focused on the user experience, the UX UI, and kind of how the flow would work, so that it isn't just about folks in the ecosystem using zkLend, but folks on the street that might actually try out Web3 one day, and they might be like, okay, well, what's the zkLend? Is it hard to use?
So it's like everybody has their unique strengths and capabilities, and everybody brings more to the table. So hence more success as well, because like different ideas, different thoughts brings up end resolution or end product at the end of the day. So like before we talk more about zkLend itself, what's the difference in your opinion between Web 2.0 or TradFi and Web 3.0 or crypto and working pace, for example, or innovation?
Maybe we start with TradFi and then Web 2.0 and then maybe Web 3, kind of.
Yeah.
Okay. So my experience with the TradFi is that in terms of lending and borrowing per se for what we do, a lot of what it's done is basically it's through a centralized party per se. So basically banks, licensed lender, and just exchange where they do a little bit of financing on the side as well. But what you don't see in a lot of these centralized party is that they control the price, they control the transparency of data information that you have, and they also control the credit process of who can get on board, who can get approved, and things like that. So, and also not to talk about the process of it in terms of the execution, whether you would have to pledge certain assets, you would have to pledge your personal reputations on it, for example, in terms of a guarantee, and so forth. So there are a lot of inefficiency in terms of how that can be done, and also not to talk about basically everybody's talking about the same thing. It's bank-only banks, client that doesn't need the money per se, because basically if you don't have the money, if you do have the shortfall, they won't be taking on the risk to basically bail you out unless you have a very good proposition in terms of your shares, in terms of your future prospect and things like that. So putting it into DeFi space, it's what I see. Its touch point. It's basically a lot more dynamic. One, dynamic. Two, it's much more diverse. What I mean by that, it's dynamic meaning the interest rate or the other how the user get on boards and who can get on boards. It's not controlled by one centralized party, and basically everyone who has internet access will have access to it one way or another. So that actually has a potential, but currently may not be the perfect solution just yet, but the potential to reach emerging markets where you have a lot of populations that actually needs this financial services, and they don't have access to it. They don't have access physically or in terms of their personal capacity, whether they have the asset to pledge to borrow. That's one. And two, it's because Web3 it's leveraging on just the internet aspect of it. So everyone with internet access, and I would say if you go to, let's say, any emerging country or close to second tier, third tier country, banking access may not be always available, but internet access is a lot easier. So with that, I think it opens up a lot of doors and how business and also owners or individuals can interact with the financial system and being able to, for example, let's say they hold certain assets and they can make use of it and borrow stable coins from it or vice versa. And I think the possibility it's limitless, and I mean from what I'm seeing at this time. So that's kind of my first take on how TriFi and DeFi kind of differs fundamentally.
Great. I guess I'll take a stab at Web 2. The way I usually think about Web 2, it's not very clearly defined, but the way I usually think about like Web 1 and Web 2 is like, Web 1 is like the Internet Explorer days. People actually start like understanding how to connect your computer to the internet and actually start browsing. When I think of Web 2, I think a lot about mobile phone apps as well as e-commerce and shared economies. So I'm thinking like Airbnb, Uber, Google, Deliveroo, for example. And while I think it's been really, really great, right? Like if I want to call a cab, like what I can do is I can just like, well, not here, but like I can call an Uber.
Not in Paris.
Yeah, not in Paris. Yeah.
It's impossible.
I gotta be
Paris.
honest. Uber in Paris isn't the best experience. But G7, for example, brings about a lot of convenience. Like if I want to order food at midnight, like I no longer have to go around the block to find like a restaurant and get a shitty sandwich. I can actually browse on like Deliveroo and be like, okay, well, I want pizza tonight. Like who can get me that? So, I think it's been very revolutionary, but at the same time, there's a question around data and data sharing. A lot of your information is concentrated with a couple of really big companies, and what they do with your data is unknown, and it can actually be very scary. And I think that's why, when it comes to Facebook, Google, right? Like, this is really creepy, but the other day I was talking to someone about like Invisalign, right? And this conversation just came out of nowhere, and suddenly I'm seeing ads on Invisalign like a couple hours later, and I'm like, how is this possible? I never typed it into my phone. So I feel like it's things like that kind of do scare me a little bit about Web 2 and what they're going to do with that information. And I think that's the big difference that Web 3 will give us, because it's decentralized and it's censorship resistant, and you can go on if you want to. So I feel that still has some ways to go in terms of user experience, but that it sets a very strong foundation for at least people's values and what they care about.
That's true. Most people I meet in crypto, they're also very philosophical about the space itself, and like to talk a lot about the philosophical aspects about it. So, but we can talk about this a little bit later. So what is zkLend? So what do you guys actually exactly do for the people who don't know what's zkLend?
Okay, yeah, I'll take a stab at this. So we are a lending protocol. So in very, very simple terms, let's just say, Gurka, you have 100 ETH and you don't know what to do with it. What you can do is you can actually deposit it into zkLend, and that money will basically contribute to a pool that gets lent out to other people that might want to borrow ETH. Everything is done over collateralized at the moment. So, sorry, let me backtrack a little bit. We have actually two products, one called Artemis and one called Apollo. So our Artemis product is the permissionless product, so anyone would be able to borrow and lend with that product. And then with Apollo, it's actually permissioned. So the borrowers would actually need to go through a KYC or KYB process before they're actually able to borrow from others. And the idea is that really lays the foundation for either compliance or regulation for some of the institutions, because potentially they can't, they actually need to follow certain compliance rules, or it lays the groundwork for under collateralized lending later down the line.
So Artemis is more for the average user, more so to speak, and Apollo is a white glove service for institutional. Okay, let's say I'm from Nepal, right? And I was talking with Rohit yesterday about lending money as like a farmer. So will there be any capabilities in the future with Artemis for someone like a farmer in India, so to speak? He would like to take a loan to buy a I don't know, he doesn't want to sell his Ethereum, but he wants to still buy something for his factory or whatever, something like that, or farmland, sorry, in this case.
Sure. So in this case, basically, because for Artemis right now, we need the over collateralized component of it. So let's say in the case where they have accumulated through previous business, they have accumulated some cryptocurrency in terms of Ethereum, in terms of Bitcoins, and they're seeing that they want to hold that, and in the long-term aspect, they feel that Ethereum it's the right asset to hold on to. Then what they can do is they can deposit this Ethereum onto our Artemis platform, and what it does, it's one, it earns a yield for them on the deposit side, and two, it's enabled them to use it as collateral to borrow against it. So let's say in the case that they need to use it to buy, let's say a short-term fertilizer per se for the farming, and then they can use that to take out a stablecoin USDc or USDT loan and use that to off-ramp it and then use it to buying the actual product. And at the end of it, when they have done the trade and they have done the farming cycle, and then they have the proceeds from it, and they can turn around and repay the USDC and getting their Ethereum back. So that cycles basically can revolve at any given time. There's no lockup period. There's no pre-approval process for them. As long as they have the Ethereum to deposit, then it's open access to them.
So
Maybe I can add on
Yeah,
to that
sure.
a little bit. I think one of the things you were insinuating is, can we use real world assets as collateral to help?
that's
So
really
let's
a
just
follow-up
say
question, yeah.
if he's a farmer and he's got harvest for, I don't know, in the next, I'm not super familiar with agriculture.
harvest, maybe.
But, yeah, maybe NFT harvest. But let's just say he grows wheat or something,
Yes.
and currently he needs some upfront money to help him fund kind of his venture, but he doesn't have anything yet, or he has the guarantee of his future harvest, or maybe he has, I don't know, a car that he wants to use as collateral. I mean, obviously right now we're not going to support that because we just don't have the footprint across the globe to be able to assess the value of different real world tangible assets. But I think that's not to say in the future we can't connect real world items to as collateral. Right now we only take crypto as collateral because everything is on chain, but that's not to say in the future it's not something we won't consider. It could be stocks. It could be I don't even know. The possibilities are endless. But I think that's definitely the next frontier that a lot of people will be exploring.
I think we will tokenize a lot of real world assets and bring
Exactly.
it on chain and perhaps even collateralize at some point. That's what I truly believe in as well.
Yeah.
But it's just a question of time, right? Until by the time it will happen, and if it's even technically possible, how will we build in Oracle systems for the crops? Or, that's so complex.
And how the liquidation system
That as well. You can't just liquidate a farmland. It would be so difficult.
Yeah.
Oh, okay, we're gonna liquidate your farmland. It's like,
Yeah.
how are the capabilities? That's the question. But I think it will happen sooner or later. So to Apollo, why would an institution take out a loan or put his funds into a pool? Why shouldn't he do it on Artemis, for example? Why explicitly Apollo? And how did this idea come up that you want to support help build a product for institutions, more or less.
Do you want to take it first time?
Yeah, so I think a couple of folds I just want to clarify, right? Like the Artemis experience is you can be anyone as a borrower or lender. So Kirka, you can deposit ETH and then you can borrow WBTC, for example. On the Apollo side, our borrowers are all KYC'd. But that's not to say all our lenders have to be KYC'd.
Okay.
So I think in an ideal world, what we want is we have an Artemis and Apollo product. But if you are a user, you come in and you want to deposit ETH, you can, or USDC, let's just say, you can choose to either lend in Apollo and get a higher yield because potentially it's under collateralized, or you can choose to deposit into Artemis, which is over collateralized, so you'll likely have a lower yield because the risk is lower. So we want to give users the option to have like to assess kind of their risk profile and how they want to lend to others. But in terms of who gets KYC, why not? I would say twofold. First is just because, I don't know, large banks, for example, or other institutions, they often have to follow very stringent regulations and compliance rules, and that means that we as zkLend would also need to ensure that like they kind of comply by certain of these rules, which is why we have a KYC program so that they can onboard with us and get whitelisted. But the other part is actually the under collateralized part, which is the more interesting part in my opinion, because capital efficiency is something that we always talk about. Why do I have to take out an over collateralized loan? It doesn't make sense for some people, and the reality is, if these institutions don't mind putting their name on the line and they actually know they have a good reputation, why not let users assess whether or not they want to lend to them under collateralized? So it's more so presenting an additional option, but also creating an extra channel for these guys to fundraise.
So
I can actually add on just one minor point on this one. So it's for Apollo, obviously we want to amalgamate the institutions and also the retail component side of things, and I think it's important for us to really focus on Apollo being the institutional product where compliance is also one of the top priorities for the protocol. So for the KYC component, I think this is actually not just when you, for example, looking at a protocol, not just whitelisting, not just checking their actual company documentations and then get their wallet whitelist and that's it. I think it's an ongoing process where it actually goes into different tiers. For example, if you have lenders or borrowers that can only take money from counterparty that are not engaging in any of the, for example, any money laundering or any from the sanctioned countries or sanctioned parties, there will be different tiers of compliance onto it so that they can only borrow from, let's say, triple clear entities. And you would have entities which are a little more flexible. They have to be doxed because they want to, let's say, use the uncollateralized or under collateralized route. They have to be doxed, they have to show their names, but they can take essentially any money from the Web3 space. So that will be a lot more flexible. So we have different tiers of how we engage with the institutional clients so that we are always on the forefront of understanding what is their compliance need, what is their compliance hurdle, and whether AML or CFT is something that's high on their radar. And if so, then we will have the highest level of security for them in that sense.
So no anon with Bored Ape profile picture, if possible.
Not unfortunately I would say for institution, lender and borrower, that could be a little more challenging.
It could be challenging.
Yeah.
And so, what kind of services will these guys receive? These institutions, like will they have their own designated person who will manage them, or like a concierge service similar to that?
I would say upfront before we actually start launching Apollo, we will have a team. We are putting a team together to approach them. Basically, these are, you can think of them as either relationship manager or kind of like an account manager. They're not investment advisors, or they cannot provide any of the investment advice. But what they do is essentially they help onboarding, they help understanding their actual use cases, their compliance need, whether they have to abide to any of the OPACs, measures, and if so, then we would bucket them into different tier. So then their counterparty will only be certain parties. Let's say it's a close ring pool for them, and if not, then it's going to be open to some of the approved retail user as well. And that's one. And then two, it's when we get them on board. One way that we are looking at doing it's for the under collateralized route. We are looking at some of the names, and we will open a designated lending pool for them. So what it means is they are ultimately the borrower for the entire pool, and they can borrow up to the limit is set by themselves, the interest rate is set by themselves, and also some of the repayment terms is also set by them, whether they would be repaying quarterly, or they will repay all at one go, or repay at any given time. So these are flexibility that will be set by them. So when you have a lender, that could be an institution, or that can be a doxed retail users that approve that they have been granted the professional investor status, let's say, they're able to interact with these institutional users, then they can look at some of these terms, look at the names, and see, okay, this interest rate, I'm willing to take on a higher risk, and I feel comfortable with certain names. I know them. I know what their business is and the business model is, and they can lend directly to them in an under collateralized manner.
So I've got two more last questions in regards of product. What is your strategy to onboard these institutions? Do you already have like partnerships ongoing? You don't have to disclose the name, and especially not only institution but average individual or crypto users who haven't moved to Stocknet, for instance.
I'll start with the last part of your question first,
Okay.
maybe with Artemis. And just to share a little bit more on our roadmap, we are planning to launch Artemis first before we launch Apollo, just because we think that the time is ripe now when we look at the Starknet ecosystem. It's blown up. You of all people probably know best, right? It's blown up in the past 2-3 months. And we feel that, being able to capture that opportunity is probably first and foremost our highest priority. And then, after that has stabilized, then we would look to launch Apollo, which is catered more towards institutions. In terms of our strategy to onboard people onto Artemis, I think we stand by it, which is when we actually first started talking with other folks, we're like, okay, this is how we're going to do it. We're going to do a lot of educational series, and we're going to do a lot about, why Starknet, what is Starknet, like what's so great about it, before we start talking about zkLend. And the reason is, no one's going to know zkLend unless they know Starknet. And so some of the things that we've really come through with, which is something I love, is we have the Zen and Friends AMA series, and that is... this is a series that we've done over the past 4 weeks, and when we continue to go on around the different parts within the ecosystem, or different parts of Web3. So our first series is the infrastructure series, which literally featured Argent, Nethermind, Stork, Oracle, and Yagi Finance. And I think the idea is we're not going to go super technical into these AMAs, but it's please explain like I'm Vive, what is a price of Oracle, right? How are you guys different from Chainlink, for example? And for me, I watched a lot of YouTube videos as I kind of ramped my way up onto Web3. So I can only hope that experience also helps others out. So yeah, our I guess to summarize, our strategy is very much we want to help onboard as many users onto Starknet as possible, not only on zkLend, and then later on we could focus a little bit more on product differentiation.
The series is available on YouTube or Spotify, SoundCloud, kind of platform?
So it's available on Twitter because it's recorded. We did it
Okay.
on Twitter Spaces. But good call on SoundCloud. I think YouTube would be difficult because we're not on video.
Okay.
Yeah.
SoundCloud. All right.
Yeah.
I think on Spotify as well, right? Because I
Yes.
heard some.
Yeah.
Okay.
Yes.
So guys, you can tune in on Spotify. I'll put in a link down below. So yeah, and about the institution onboarding.
For sure.
Yeah.
Sure. For institutional onboarding, that comes with the actual launching of the product. So when we launch, we actually want to have a few of our investors, and two, our partners that we have been talking to them in terms of as a power users case, and being able to launch with them at day one. So instead of coming up with for example, because what we have for Artemis, we will come onto testnet and we let people test with it with fake tokens or test tokens, and then we will come onto mainnet and wait for the capital to build up, because we are depending on the actual the retail users' actual daily flow in order to build up the liquidity pool and the actual borrowing side of it. But for institutions, what we need is, on day one, we will have capital from them. For example, they committed, let's say, on agreement that they will put in, for example, 50 mil or 100 mil as the base of some of the currency pools that they want to put as the deposits. And then on the flip side, we will have institutions that say, okay, we understand what they need to borrow. Then we will have them open up pools, and these two would automatically on day one be able to interact on a low level base already. And on top of that, then we would gradually bring on more institutions. I would say our target would be about 2 to 3 per quarter. I think that would be a right time, because one, we don't want to be too aggressive, making sure that we understand the needs of each one before we actually bring them on board, so that they have a use case. Because not to put anyone on focus on this one, but I think a lot of protocol are trying to tap into the institutional space, but I think they are still lacking the actual interaction piece component of it, because I do think that institutions, they are very sophisticated, and for them to actually come onto a protocol and use them as an individual kind of capacity, it's almost impossible. So for them, actually, you would have to have a team to support them. You have to have prior communications with them, and when it's on board, much of it's very automated, so to speak. So I think that will be a process too. When we have them onboarded, a lot of what we do is actually trying to use our smart contract and how that integrates with, for example, some of the API hooks onto their own in-house application, so that as much of the process can be automated as soon as, for example, let's say they have deposits on their, let's say, receivable, let's say, then they would be able to on-ramp that into cryptocurrency, and then put it into deposit pools, and everything will be very automated, instead of having one person sees a balance and they would convert it, and then they will put it onto a protocol. So that is kind of our approach of tapping into the TradFi space or the institutional space.
I like the communication part, because I think then you can figure out the needs of your customer, so to speak, and that's very important in every product, to know your customer. So I would like to talk a little bit about DAO and tokenomics. Can you stake? Do you have tokens? Will you release tokens? Not exact date, but it's like some kind of tokenomics implant or a DAO structure planned with zkLend?
Yeah. So we have a token. We don't have details on kind of when token, if that's what some people were asking.
I don't want to know about tokens, just basic the logic of the token.
Of course.
DAO and so forth.
Of course. So the token is a centerpiece of our protocol, and the reason why is we use it to incentivize certain behaviors within the protocol, right? So if certain pools are, let's just say, running low because utilization is extremely high, we want to be able to incentivize properly and reward those users who are potentially depositing that specific asset with the Zen tokens. Ultimately, we want the people who get our tokens to be participants of the protocol and not just like a token that we launch separately from the protocol. It's also, I guess, a good way for governance, because ultimately the people who use the protocol are going to get our tokens, and they're going to be able to vote on different DAO proposals. So that's kind of the quick and dirty download on our tokens. But in terms of kind of staking and token utility on what people are going to do with it, we haven't finalized the details yet, but we know there's going to be a staking program because we need to help secure certain pools in the protocol. So, for example, each of the pools will be over collateralized. But in the event of any black swan or any kind of market downturn, we want to be able to secure these pools. And the way to do so is to create a buffer between what's in the pool as well as certain levels of liquidation. And the way to do it is by users staking Zend. So what we usually say is by staking Zend, you help secure the protocol. And in exchange, we will probably reward users with something else. But the details of that has not been finalized on our end yet. So more to come on that.
More to come.
Yeah.
Soon-ish.
Soon-ish, yeah.
So you want to introduce governance, and for me personally, like I think like a DAO structure, certain kind of DAO structure will change certain kind of paradigms, how organizations function, especially like in Web 3.0, and I believe there would also be a part in the next cycle, DAOs that really function as a community, as a collaboration of different kind of minds and ideas and proposals.
There's so much DAO tooling. Like yesterday at
Daoism.
Daoism,
more or less. Yeah.
Everyone's like really excited about DAOs, but I just think the tooling is not quite there yet. So I feel like everyone is like now talking about, oh well, like we have a DAO, but like can you help us build some tools around it?
That's true. And so what are your personal thoughts on DAOs besides the tool part? Like, is it sometimes a necessity to be a DAO in Web 3.0, or can you just be a protocol where the team does the main decisions?
I'll start with my view, and then Brian, please feel free to share yours. So I think DAOs are absolutely necessary, right? Because the whole point of Web3 is decentralization. And so if you're running a protocol that is permissionless, there absolutely needs to be a DAO to help make decisions. That being said, I do think that there are some very critical questions that have not really been answered from a DAO's perspective. And not even DAO, just like I was listening to a talk back at Dev Connect, and people talk about like decentralization, but a lot of times it's like when you need to push an update, right, for parts of the network, when you need to push an update, do you wait for like the community to vote on it? If it's critical, like you absolutely need to push the update now, and you need to make that decision, right? So how do you balance between having the community vote on things and like having a community that's too big that like information leaks out and you can't do anything in like a timely manner. So I think that's like one of the big questions. The second like kind of issue I still am trying to wrap my head around is just concentration of power. Obviously the more tokens you hold, you tend to have a higher concentration of power. So how do we make sure that like the small guys like us, right, like we get a voice in the face of really, really sizable investors that may own a large stake in the DAO, right? Because if there's a proposal, if they vote on it, like I mean that's it, right? The zkLend proposal 1, like that passed with flying colors because I think one guy with like a really large amount of tokens voted on it. So I think these are things that I haven't quite formed my view on yet, but definitely on my mind.
Sure. Yeah, I totally agree with Jane's point on the centralization of power in terms of when you have the token and governance mixed together, and how you actually allocate it, for example, your usage, and then you are worked with the tokens, and then you can actually have a say in to how the protocol is being built, and you would have a conflict of interest down the road, unavoidably. And I think a lot of different protocols have tried to use different structure in terms of having different types of tokens, where one is a governance tokens, the other one is the utilization tokens, let's say, utility tokens. And I think everyone is trying to work out different models, and down the road, I do feel that in order to be a decentralized protocol, having a DAO is the way to go, because ultimately you are giving your authority rights in terms of setting the interest rate or setting any other parameters to the people, to the users of the protocol. And I would say on this front, what we don't see at the moment, it's a lot of protocol are dictated by the community, and so one thing for a DAO to work perfectly, it's to towards a perfection, it's to have a community that's really active, one, and two, that they care about the long-term well-being of the protocol, and three, it's they have this sufficient knowledge as to what the protocol, how it should be, and understand the repercussion of any of the steps being taken. So the mechanism of it, one, it's whether we have 2 tokens or 3 tokens that actually separate the actual governance or the utility of it, And the second part is, I think it's more education, it's more community management, and being very active into the whole ecosystem, so that you would be able to understand the long-term view of the protocol.
Yeah, I've got like, I had simple thoughts recently. I was thinking, okay, I mean, a whale can influence a lot, right? If he's got a lot of tokens, but why not cut it down to individual wallets, regardless how much tokens you have? But the problem is, of course, everybody can create multiple wallets, so that's like, there's always some kind of counter to the idea. So it's, I think, a thing which will happen slowly over time. I guess some solution might come that some certain kind of fairness will be implemented. That's my hopes as well. So let's see. So how can someone contribute to zkLend, for example, besides developers
Sure.
for the community itself?
Yep. So I think in the community, one, it's what we're doing right now. As Jane mentioned, we're doing a lot of AMA series to teach people about the ecosystem, teach people about our product, and what we intend to have an impact on the ecosystem, on the Web3 space as a whole. And I would say for anyone to contribute, it's one to learn about Web3, learn about DeFi and what it really stands for, as opposed to, for example, CeFi and so forth, and the difference between the two, and be an ambassador of the belief, and basically to teach newcomers to help with the onboarding process, because I think the major hurdle or major blockage for mass adoption into Web3 space is because it's not intuitive. It's difficult to use for a lot of the, let's say, older generations per se. And I think having these guidance, or having these community members create content, easy to use content, and for example yourself, creating contents that actually help to gel with the mass market, it's really useful for us, because we, as builder, obviously we want to have as much touch point as possible, and we want to have the ability to impact the most sophisticated, and also the newcomer as well. But I would say for us, there's always going to be a gap in terms of how we get in touch with them. So being able to have the community to build that web and build that web of support is critical for a long-term being.
Yeah, another shameless plug I have to talk about is we have this Crew 3 program.
Okay.
So for anyone who's actually interested in contributing to our community, we are starting to do more and more quests around, please help, tell people a little bit more about zkLend. Please help create any marketing assets that we would be able to use, because these are actual things that we as zkLend would be able to use in our marketing materials too. So I think if anyone's actually interested in getting involved in the community beyond kind of the learning, but the actual teaching part, I encourage you guys to check out Crew 3. Yeah.
So I'll add a link down below.
Thank
so I'm
you.
sure you'll find it, and so please do contribute to our viewers. So I've got the last few questions, and it's a wrap. So I'm generally curious about the recent market situation with Celsius, BlockFi, Luna, Anchor, for example, and do you see any? What are your opinion on risks on uncollateralized loans? I mean, you might offer that as well. I mean, some players might have a good reputation, but what we saw with 3 Hour Capitals, it's not so. How can you avoid it in the future?
Yeah, I can take. There's one point I really want to make, which is around decentralization and information happening on the blockchain. I think my biggest takeaway in all of this, I guess I would isolate the Luna event from the Celsius, and because it is a domino effect, right? Obviously Luna crashed, and then Celsius, because it had lent out different positions to and staked ETH and other stuff. So let's separate it for a second. Let's just talk about lending, right? So in the case of 3 Hours, right, there were a couple of I guess over-the-counter lending that was being done by some of the CDFI players to 3 Hours, and the problem with that is no one knew, right? No one knew how much was being lent out. And at what cost. And for me, my biggest takeaway is just that everything, if it happened on the blockchain, we wouldn't necessarily be talking about this right now.
That's true.
Because if we know that this is 3 Arrows wallet, I mean, there are like wallets like Nansen tracks some of this stuff, right? But if we know that like the only place that they can go to borrow money is on the blockchain, then it becomes very, very clear what their positions are, what they hold, and kind of what their obligations are. And that to me was the biggest takeaway. And so if anything, you know, people talk about like crypto like going down, like industry is not doing well, but like I feel like DeFi has actually fared very well in this entire storm. Like Aave and Compound, they've liquidations have happened as they should, and so it's a stronger case for DeFi and a stronger case for on-chain activity.
Maybe another tangent to it. It's I would say for the CeFi or for example like you mentioned Celsius or let's say BlockFi or I won't talk about the Luna anchor component because that's kind of the leading effect of But if we start starting to talk there and then talk about the contagion effect afterwards. Essentially, you see a lot of the CeFi component where they act as a bank in terms of the lending and borrowing market, but behind the scene, actually, there is a large component of asset management aspect to it or trading aspect to it, where they are actually making proprietary profits from it. So I think this would be one of the core reasons why transparency is not something that they are intrinsically able to provide on record, because these are basically private profits that they make from their daily operations, and they do have, let's say for some of them, they do have public statements, but because they are centralized, because they have shareholders, or because they have stakeholders that actually have vested interest in their investment return. So that is why they behave the way they are. And I think a lot of DeFi protocol, not just for lending and borrowing, but for let's say a Vault, a UVault, or other Vault protocol at the moment, they are trying to reproduce or recreate this exact structure, but through a transparent manner. And I think what the whole experience or event that has fallen for the past couple months is that we see actually there's a very good push and very good use cases for some of these features to be ported onto a DeFi aspect of it, and being able to leverage on some of the toolings and some of the innovations. For example, the tokens where it's yielding tokens, and then you would have applications on the ERC20 tokens afterwards, and these are all applications that can be used to help in asset management aspect of it, and being able to basically diverge a lot of the capital from original, let's say, institutional space or even retail space, and where they feel, okay, CeFi, it's easiest to put it down and then I can earn a high yield, but basically carry that and skip that step, and having them directly interact with the DeFi and being able to basically get the same rewards, but not having to lose the custody of their capital, and being able to be in full interaction, full transparency of it.
Interesting conversation. I think that would be my final question, and I believe it's a wrap. Thank you very much for being here.
Thank you so much.
Very interesting call. Unfortunately, we didn't go out and have a nice walk through the city of Paris, but maybe next time.
It's cleared up now. Maybe we can go
Maybe we can do it. For a croissant. Maybe in Hong Kong. Who knows?
Yeah, for sure. Yeah.
Thank you very much once again.
Thanks, guys.
Thank you.
Goodbye.
Thank you. Bye.